So, Caledonia Mining, thanks for taking the time this morning. Briefly, we're a Zimbabwean gold mining business. So we have an asset called the Blanket Gold Mine just south of Bulawayo in Zimbabwe. Last year it produced 56,000 ounces of gold. All-in costs, we haven't published full year results yet, but going to come in somewhere between 810 and 850, we think. And we're in the process of growing that production through a self-funded investment program to get to 80,000 ounces by the year 2021. That's really the nub of the investment case, and I'll talk you through that project in our presentation. We have $12 million in the bank, no debt, and we pay a dividend, which is slightly unusual for a business of our size and for a gold mining junior. Currently the yield's about 4%. So I say we're in Zimbabwe. We've been coming to Indaba for some time now, and we've always said that Zimbabwe is a fine place to operate a mine and that we expected the politics to improve, and certainly events have proved us right. We've noticed just our own experiences in the country, but also investor sentiment is quite significantly more positive lately. Zimbabwe has had almost no gold exploration proper activity since the year 2000. So people don't really know this, but before the year 2000, Zimbabwe was bigger in gold production than Tanzania, bigger than Mali, bigger than Burkina. It was probably the third biggest gold producer in Africa. And from the time gold went from $250 an ounce all the way up to $1,900, nobody really took advantage of it. People like us continued exploring their own assets, but nobody really took advantage. So this greenstone belt there is probably about the size of Burkina Faso. We're down towards the south of the country, but that diagonal trend there's 17 assets that we're aware of that have produced more than 1 million ounces over time. I'll just highlight them briefly there. You can see this presentation on our website. But certainly we think it's highly prospective territory, and the mine we've got is a real gem. I'll gloss over our capital structure. You can view that at your leisure. We're capitalized at about $80 million at the moment. That's our resource base. So we've got 1.6 million ounces. That's the number on the right. The important trend is we've grown it every year for the last 7 years, and we mined about 250,000 ounces over this time. So the mine is 100 years old, over 110 years old. It's never had a 100-year mine life, so there's always an element of resource extension with these vertical ore bodies. This is 1.6 million ounces gives us a life out to about 2031, but we certainly don't feel resource constrained as a business. And you can see we've been investing in exploration since 2015. We expect that graph to keep gradually trending upwards, I would think. I mentioned we're growing production to 80,000 ounces by 2021. That is a new shaft we're sinking at the mine. It's fully funded from cash flow, so we haven't had to put any of our own any additional capital into the mine. We've managed to maintain a cash balance of $12 million, pay a dividend to our shareholders, and fund a project where we've invested $60 million for the last 3 years. We've got about $50 million to go in the next 2 years, and then the project then will be at 80,000 ounces. With that, we'll see effectively the dilutive effects of volume. So we'll have the fixed cost components of the mine will be split over more and more ounces. We'll get our cost down to about $750, somewhere between $700 and $800 an ounce all in. So the numbers get quite compelling. I'll talk you through that now. That's a cross-section of our mine. So north-south, that's about 3 kilometers of strike. You can see the ore bodies we mine. The grey bits are stuff that's been mined out. I mentioned the mine's 100 years old, so we've been mining above the 750-meter level, which is that black line you can see, which is our historical infrastructure constraint. When we bought this mine from Kinross in 2006, it was in pretty good shape. That was the existing infrastructure we had. That's 4 shaft. That's our main production shaft. So currently, our workers come down the Jethro shaft, that shaft on the right. They walk all the way across to one of these those ore bodies. That's about a 2-kilometer walk. And then the ore is trammed all the way back and up 4 shaft. This isn't how you would build a mine if you were building it from scratch. Right? This is it only looks like this because it's 100 years old and the mine's grown organically over time. So we also have a slightly deeper shaft which takes us into some of the high grade areas there, number 6 Winds, which is our only shaft access at the moment to the deeper areas of the mine. These are our exploration targets. So the yellow is the indicated resource, the light blue is inferred resource, and then that's where the gold came from. So the geos tell us, and if as long as we can keep getting down there, we expect to continue mining at depth in this ore body for quite some time. So that's the central shaft. It's coming down in the middle of our of operation. That inverted V ore body is basically the bulk production area. So we're quite fortunate with this mine We have a few things that help us keep our costs low. We've got one very wide stope, so we're mining 20, 30-meter wide stopes in some cases, so it's almost a bulk underground mining operation. We get very good gravity recovery, so half the gold comes out in gravity, and our cyanide recovery is over 93%. So all those things help to keep the cost quite low. The central shaft that we're going to bring down basically takes us from surface down to 1,330 meters. One drop, it's a 6-meter diameter shaft, much larger scale, we're effectively building a brand new mine, these new 4 levels down here below the current mine. And this is going to set us up for many years to come. We'll be mining on 4 levels, which gives us much greater flexibility. We'll have plenty of spare capacity. The workers get down much quicker. It, hoists 70 men at a time. So it's a transformational project for us. And we're certainly excited about it. These are some of our exploration targets. I'm going to gloss over this quite quickly, but there is, if the ore bodies keep going, and there's good geological evidence to suggest they will, we will certainly expect to keep that 1.6 million ounces and a rolling 10 to 15-year mine life for some time. So there's a few pictures. It's a decent scale operation. Like I say, getting to 80,000 ounces, all in costs at these gold prices, you'll have an operating margin of $600 an ounce, so we're making pretty good money. That's what it means for our production. So the dark grey bars on the left are historic, and then as we get through, we're targeting guidance this year is between 55 and 59, and then we'll get to 80 by 2021. Our costs we expect to get down to somewhere between 700 and 800, and we feel pretty comfortable with that, given where they are at the moment, and given the effects of that, the additional tonnage. I'm going to gloss over that in terms of earnings. This is where the maths gets quite easy, right? We're taking 80,000 ounce a year operation. We'll be making at these gold prices $600 an ounce operating margin. That's $50 million of EBITDA. At a take-off taxes and minority interests, and you're talking on a business on a forward cash flow multiple of 2, maybe 3 times. This comes, and this is probably the most important chart of the lot. If you remember nothing else from our presentation, this is the one that I think matters. This is directly out of our cash flow statement. So the dark grey bars are the capital we've invested. The light grey bars are the operating cash flow after tax from this business, straight out of the cash flow statement. So 2015 and 16 are actuals. 2017 we haven't published yet, but we feel reasonably those numbers will be relatively close. So in 2016, the last full year financials, the mine generated $23 million after tax. We invested 20, and we dividended back 3 to our shareholders. So we kept the cash balance flat. That $12 million we got in the bank is probably not going to change much, and we've kept it roughly flat year on year. This year, for 2017 numbers, we'd expect that to look roughly similar. If gold stays where it is in 2018, we'll do slightly better, but we model this at 1260 gold, so that's the number we take forward. But after, so we got $21 million to spend this year and another $21 million to spend next year. And then the project's really, that's the hump is done, and we've got 2 years of CapEx to go. Both of which are funded from cash flow, both of which we can afford, and we can keep the dividend and hopefully put a bit of money in the bank. But that's where the numbers get interesting, right? It's post 2020, when CapEx tails off. Long-term sustaining capital for this mine is about $5 million, and the operating cash flow coming out of the mine will be, depending on the gold price, somewhere between 30 and 35 million. And that's where we can certainly, if you consider the dividend at the moment costs us $3 million a year, we could certainly afford to grow that dividend quite comfortably. Or we could look at some attractive projects in Zimbabwe, which we certainly feel we have a competitive advantage in the region, and we understand the region quite well, and we can put that capital to good effect. So this is a comparison of dividend yields. We think that there's a compelling value investment case here, but this is just the dividend yield's pretty good. Effectively, shareholders are getting paid 4% while they wait to get, and then the real payday comes once the capital's finished after 2020. So that's pretty much the investment story. Decent growth project, funded from cash flow. You get a pretty good yield while you're waiting. Margins are pretty good. We can back ourselves to survive at just about any conceivable gold price, we think. And we have good people in country, and we think our results, we've operated this mine through the hyperinflation, through the farm siege, through all of the troubles in Zimbabwe, and we've come through and done very effectively. So thank you all for your time.